On 5 November 2024, we witnessed what may well have been a striking, or at the very least globally impactful, election result for the US presidential elections. Once again, no woman at the helm of this vast nation, but for the second time, Donald J. Trump, elected as President of the United States. Is it a curse or is it a blessing? That depends on where you're sitting. But one thing is perfectly clear. His return to the Oval Office is already having a major impact. Not just on America, but here as well, in Europe, in the Netherlands, across the financial sector, in the capital markets, and in the way we think about and manage risk and competitiveness. So what does the return of Donald J. mean for financial markets, but also for regulations and even for the financial landscape here in Europe and in the Netherlands? To explore this, I'm joined today by Martin de Vouwes, Director and Lead Asset Management at Varrlyn. Martin, welcome.
Thank you, Marianne. Thank you. Great to be here again. And fantastic to do another podcast with you. Looking forward to discuss this interesting topic.
Looking forward to it again, Martin. When talking about Trump's campaign, it was full of promises to dismantle what he called crippling regulation. Are we actually seeing that happen?
Yes, Marianne. So you may not like Trump, but at least he does what he promised. He promised to take away a lot of the regulations and make the government smaller. And that's actually what he's doing on a lot of different areas, but also especially for financial markets regulations. He's taking away a lot of the regulations related to bonuses, to consumer protections, but also loan restrictions and other regulations. So it actually makes it easier for banks to do business, makes them more competitive against banks outside of Europe. And that is an interesting thing. Will it be an advantage or disadvantage? I think that's the interesting question that we're going to discuss here.
Yeah, and that's the big question. But I also understood that there might very well be a concern even among the banks themselves.
Yes, that's correct. So on one hand, they actually like that they have less regulation, so that takes them less effort to comply to them, to report to it. It also makes it, as I said before, easier to do business. But they also know that a bank can fall over, that a bank can go default.
And that's actually what we've seen already.
Yes,
yeah?
So we've seen some bank runs in the last few years in the US. So after the corona crisis, the interest rates went up, and that actually caused US Treasury bonds to devaluate. And some of these banks had too many of these banks on their balance. They were also highly exposed to the technology sector and to crypto-related companies. And those two things together caused a bank run. I think in 2023, 5 American banks actually fell over. And the years following, another few fell over. So, yeah, these risks remain. It was not just for a joke that these regulations were implemented after the 2008 financial crisis. So, yes, it's on one side, it's easier to do business, but it also creates a risk for these banks and actually a system risk for the financial sector.
The banks you've been talking about from 2023, 24 and so on that fall over were smaller banks. Yeah. But if deregulation goes too far, larger institutions could very well be next or not.
Yeah, that's also what we've seen in 2008. So these banks are all tangled together. They lend and borrow money to each other. They also have sometimes shares in each other. There's a lot of tangled interests. So if one starts to fall over, then that of course doesn't help the trust in the whole system. And if they're tangled together and one falls over, that can cause other banks to fall over. And at some point, even the large ones can trip over.
Yeah, so in short, one can say that deregulation, it may offer short-term relief or some agility, especially for banks, but it clearly also reintroduces risks that many had hoped were actually behind us after the last financial crisis.
Yes, and it's always difficult to find that balance. So, you've seen that those regulations have become very strict after the financial crisis, maybe a bit too strict. That's also quite a normal reaction after such a crisis happens. And we might have to find a balance a bit more to the other way, but taking away all these regulations, that is probably a step too far. And I doubt if that will actually be beneficial on the long term for these American banks.
So on one hand, deregulation may offer short-term relief and agility for banks. On the other hand, it reintroduces risks that many, perhaps hoped were behind us. And it's not just the financial sector that's feeling the impact. Because, Martin, there's another area facing turbulence, and it's equally linked to Trump's policy agenda, which is global trade. Trump's policies on tariffs and import duties, they have always been quite controversial. But can you tell me what is happening now?
Yes, as you can see in the news, a lot of different tariffs are introduced, targeting steel, car manufacturing, especially hitting countries like Mexico, Canada, China, but also the European Union. Why does Trump do this? Well, there are actually three reasons. First of all, he wants to force these companies to bring back their manufacturing to the US, creating jobs in the US, making sure these products are produced in the US. Secondly, this is an additional income for the US government. These tariffs will be paid, and that it generates a lot of cash and a lot of extra money for the US government. And if Trump wants to reduce taxes, he can use that. Thirdly, he wants to reduce the strength of the dollar. That will bring quite a strong competitive advantage for the US. They will be able to sell their goods cheaper, and that should decrease the trade deficit for the US.
So he's actually creating a breaking bar for the dollar's position, if I'm correct.
Exactly. So he's working on a plan, it's called the Mar-a-Lago plan, to reduce the strength of the dollar. The dollar has been for centuries the currency, most strong currencies in the world. So everyone who has a lot of assets always puts a part of their assets in dollars. And that is a safe haven till now. Well, according to Trump, that safe haven is paid by the US because their goods are expensive. And he wants everyone to pay for this safe haven and therefore reduce the strength of the dollar.
So we're actually seeing a renewed push for protectionism.
Yes, for sure. So till now, we were signing trade agreements between different countries to make trading more easily. Trump is actually turning this around, raising tariffs and creating a role around the US.
And that's all speaking from an American perspective. But how does that impact us?
Well, for us, it's a big change. It's a game changer. We were used to trading openly with the US. We are selling a lot of cars, but also other products to the US. And that's not a given anymore. These trade tariffs are hitting our US car manufacturing companies, especially in Germany, very hard. But also in the Netherlands, we are hit because we are producing steel in IJmuiden, Tata Steel, and other goods will be targeted as well. So it's a new ball game, and we have to get used to that.
So it's time, or it's actually forcing European leaders, business leaders, political leaders as well to start acting, or not?
Yes. We saw this coming, of course, during Trump's first term. But then Corona came and he couldn't do everything he wanted. But now he had 4 years' time to make plans, and he's actually executing these. So we were probably hoping that this would not happen. It did happen, and there's no other option now than to act on it. So we have to think about our own defense. We have to think about the euro, about our companies. And we simply have to step up and start learning to walk on our own feet.
So it's time for Europe to recalibrate its stance, recalibrate its own acting, especially with the uncertainty around the dollar as well. And besides that, we're also clearly entering a more fragmented and volatile landscape.
Yes, and it's maybe not a bad thing. It's maybe painful, but it also creates a lot of opportunities. Germany just announced that they're going to spend and invest a lot of money in infrastructure and in their army. Besides that, you already see that European companies are doing relatively well compared to US companies. And that has been the other way around for the last few years. Also, the euro is gaining strength and becoming more valuable against the dollar. So it's painful, but maybe not such a bad process at all for us.
And it's not just the traditional markets that are actually feeling the tremors. One area where uncertainty and speculation go hand in hand, and in which Trump has actually taken a particularly unconventional stance, is crypto. Let's dig into that next, Martin.
Yeah, so also here it's a change in behavior. Till now, typically governments and regulators were very conservative and very a bit scared even about crypto. But Trump is taking a different stance. He feels like, well, this is not going to go away anymore. We better make US the crypto country of the world. So he promised that the US government would start building up a crypto reserve in different crypto coins. And also he indicated that he would take away quite some regulations for crypto.
Yeah, and he's doing it from quite a commercial perspective, or quite a commercial sense. He actually introduced his own coin, the Trump coin, the Melania coin, right after or just before his inauguration.
Yeah, what's quite funny is that you saw the Bitcoin increasing a lot of value after Trump was elected. Also, a lot of the other coins increased value after he was elected. But when he came to power and when it actually became clear what he was really going to do, he did a few, less popular things. He created his own coins, which seemed to be more a joke than something seriously. And that doesn't show that he's taking it very seriously. So the crypto market wasn't too happy with that at all. Further, he also said he would start building up a reserve in cryptocurrencies. Well, he's actually not selling dollars and buying crypto. He just is keeping the assets which he took away from criminals or in some other way put on the balance. But he's not actively buying crypto. So that was a bit of a disappointment.
He's not really walking the talk.
Yes, well, at least in a different way than, in this sense, a bit different way than people expected. Well, he didn't promise that he would sell dollars and buy crypto, but everybody was expecting that. He's actually taking a different stance. He's just not selling anymore the assets that they take away from illegal organizations. Yeah. And you've seen that the Bitcoin, but also the other coins, have reduced in value after he started as a president.
Yeah, and I've got a question about that. Do those type of action, do they pose a systemic risk?
Well, you see also on the other areas that we discussed on the tariffs, but also the regulations, that the common word with Trump is volatility and uncertainty. In every area, he creates uncertainty. And financial markets in general don't like uncertainty. So you've seen the stock markets have gone down. They are actually below the levels that they were when Trump was elected. You see the same behavior in the crypto markets. And if you take away regulations, if you make it easier for banks and asset managers also to invest in crypto, if you make it easier for them to give loans away without proper security, all those things add up. If you don't know how to deal with which tariff is being raised tomorrow, maybe another tariff is introduced, or then it's taken away again. All these things, they create uncertainty. The dollar is for a very long time safe haven for the financial markets. If that is taken away, well, then strange things could happen. I think the fall of the Roman Empire started. Some of the outskirts of the empire having to pay taxes, which they never done before.
Yeah, so could you say that we could encounter a next tulip mania in the next year?
Well, with crypto, that's of course always said since the beginning, tulip mania. And there's not a real intrinsic value behind those currencies. They have, the technology is very interesting. You also see that there are definitely some advantages against the more traditional currencies. I don't think it will be a tulip mania. That's too late for it. The crypto is now existing for quite a number of time. Plus the investments are huge, so it will not go away anymore. But it remains risky business. As said, there is not a real intrinsic value behind it like you have when you buy a stock of a company.
Yeah, and crypto is still driven almost entirely by sentiment. But Martin, then let's zoom out for a moment, because beyond the immediate market reactions, there's a bigger, more strategic question at play. Where does this leave Europe? In the wake of Trump's return and amidst rising protectionism and regulatory divergence, Europe is actually being forced to rethink its global position. Mario Draghi was one of the first to warn that Europe risks falling behind, not just economically, but way beyond. The call for greater competitiveness, it's growing louder than ever. How do you see this?
Well, during Trump's first term, we could have seen this coming, of course, but we didn't take action. We also had the corona crisis, which caused Trump couldn't do probably all the things that he would have liked to do. And in the last 4 years, there was always the risk that Trump would come back, but I don't think it was taken very seriously. Since Trump is back, it's one big wake-up call for us. So there are a number of fundamentals which we are always counting on, the US being our biggest trading partner. On defense area, we were trusting on them. The dollar was the currency in the world, also for us. Well, all these given securities are certainly not that secured anymore. And that is one big wake-up call for Europe. So on different areas, we have to take action. We're always thinking about taking action, and the time of thinking is over. We need to take action. So we have to invest in our army. We have to invest in infrastructure, in a strong euro, and also make sure that our companies can deal with a new balance in this world. And you actually see that happening. So the European companies are doing quite well compared to US companies. And the euro is gaining strength against the dollar. So maybe this wake-up call at the end, although it's a tough wake-up call, makes us stronger.
Yeah, so you have the feeling that if we do not listen to this urgent call, that we're actually working ourselves towards disaster?
Well, we don't have a choice. There's not a choice to not listen to this. And I think it's good that you see that happening. Yes, it's a painful shock, but sometimes that needs to happen to make you stronger at the end.
That's true. And let's hope that this can be the start of a genuine rebalancing in the global power.
Yeah, I think it will.
Okay, Martin, last question. If you then had to sum it all up, what should financial professionals take away from Trump's return to power?
Expect volatility and uncertainty in coming periods. Be prepared for the unexpected.
Oh, and then let's hope that we can actually make Europe great again. Martin de Vouws, thank you so much for joining me today, and thank you so much for sharing your insights.
Welcome, Marianne. It was a pleasure.
You have been listening to another episode of Varrlyn's Podcast. In each episode, we explore the trends shaping financial markets, regulation, and digital transformation, or take you behind the scenes of what's actually going on here at Varrlyn. Thank you for listening, and hope to catch you next time.